Welcome to Griffonomics. Today we're diving into Cerebras, trading under the ticker CBRS.
Yeah, and this is quite the story right now.
It really is. I mean, imagine building the absolute fastest supercomputer engine on Earth, right? You lock in a guaranteed $25.4 billion backlog of sales with the creators of ChatGPT, of all people.
The golden ticket.
Exactly. And then you watch Wall Street just absolutely slash your valuation by 40% right after your IPO.
Yeah, it's a staggering contradiction when you look at it.
It's baffling. Cerebras has basically established this undisputed monopoly in the fastest growing segment of AI compute, which is ultra-fast inference. I mean, they are the powerhouse behind OpenAI's flagship model.
Yeah, but if you just pull up their stock chart today, it looks like a distressed asset. It doesn't look like the foundational hardware of the AI revolution at all.
Which is exactly why our mission today is to cut through that noise for you. We really need to understand what's actually going on under the hood here.
Because allocators, and learners alike, we all have to look past these crazy headline GAAP distortions.
Right, like that massive customer warrant amortization drag.
Exactly, and those temporary gross margin compressions that are caused by this wild rent-back hardware strategy they're doing.
Yeah, we're going to get deep into that. To do this, we are pulling from a massive stack of sources for this deep dive. We've got comprehensive market audits, financial forensic reports, their Q2 fiscal year 2026 earnings transcripts, and the super technical Supernova Day 2026 keynote.
Oh, that keynote was something else.
It really was. We want to unravel this mystery for you. How does a company with a $25 billion backlog and literally the fastest chip on Earth get punished by Wall Street like this?
Well, I think to understand that pullback, we first have to put on our forensic accounting hats, right?
Yeah.
We need to look at this, what I call the GAAP illusion, that completely spooked all the retail algorithms.
Yes, let's start right there. Because looking at the Q2 2026 numbers, the headlines just screamed a huge revenue miss.
Well, they were brutal.
Right. The reported GAAP revenue, that's generally accepted accounting principles, came in at $180.11 million. And that completely missed Wall Street estimates.
Yeah, it looked terrible on paper.
But then you read further down into the fine print, and their internal metric, which they call core revenue, was actually $209.87 million.
Which, by the way, beat their internal guidance across the board.
Right. So I'm sitting here struggling to reconcile this, a nearly $30 million gap in a single quarter. What exactly is creating this gap illusion?
So the core mechanism driving that illusion is the amortization of customer warrants.
Customer warrants.
Yeah. To understand why this is happening, we have to rewind a bit. We have to look at how Cerebras actually secured these massive anchor deals with giants like OpenAI and AWS and G42 in the first place.
Okay, so this goes back to their private days.
Exactly. When you're a private emerging hardware company and you're trying to convince the biggest AI labs in the world to adopt a completely new architecture, an architecture that totally abandons the Nvidia ecosystem they all know and love, you have to do something drastic.
You have to make it worth their while.
Right. You have to align their financial incentives with your success. So Cerebras didn't just sign, standard hardware purchase agreements. They actually issued massive tranches of common stock warrants to these early anchor customers.
Okay, wait, let me just clarify for everyone. A warrant is essentially an option, right?
Yeah, basically.
Like, it gives OpenAI or AWS the right to buy Cerebras stock at a predetermined price, usually at a huge discount at some point in the future.
Correct. It lets the customer capture the financial upside of the hardware that they're basically taking a huge risk to validate.
That makes sense strategically, but how does that mess up the revenue today?
Well, here's where the accounting gets incredibly tricky. When Cerebras went public, the SEC required them to capitalize the fair value of those warrants as this massive asset on their balance sheet.
Oh, wow. How massive.
As of June 30th, 2026, that warrant asset sits at $1.13 billion.
Over $1 billion just sitting there.
Yeah. And under GAAP rules, you can't just let it sit there. As Cerebras recognizes actual cash revenue from these specific customers, they are forced to amortize the value of those warrants as a direct reduction to their reported revenue.
Wait, a direct reduction?
Yeah, it's categorized as a contra revenue charge.
So hold on. Even if OpenAI cuts them a literal check for $100 million this quarter for physical hardware, Cerebras has to report a lower number to the IRS and to the public markets just because of a deal they structured years ago.
That is exactly it. The cash comes in the door, the business is operating perfectly, but optically, the revenue just vanishes.
That is wild. I mean, how much vanished in Q2?
In Q2 alone, that contra revenue deduction was $44.3 million.
44 million.
Yeah. They had to shave $28 million off their hardware revenue line and another $16.2 million off their cloud services line.
Just erased from the headline numbers.
Erased. And the kicker is, this isn't a one-time charge either. This amortization schedule is going to act as a lead weight on their reported GAAP revenue all the way through October 2031.
Okay, wow. That definitely makes the revenue miss completely understandable. But that wasn't the only bad headline. The reports also highlighted a really severe margin squeeze.
Yeah, the gross margins took a hit.
Right, like their core gross margins shrank sequentially from 46.5% in Q1 down to 40.6% in Q2. And management even guided that margins would basically hit rock bottom in Q3, somewhere between 38 and 40%.
Which looks really bad if you don't know the context.
Yeah, because normally if a software or hardware company is bleeding gross margins, it signals a collapse in pricing power. Like they have to discount their stuff just to move it.
Yeah.
But the sources attribute this margin drop to something called a rentback strategy.
The famous rentback strategy, yeah.
I'm reading this and I have to say it sounds crazy. They essentially sold hardware to customers and then immediately turned around and rented it back from them. Why on earth would a hardware manufacturer do that?
I know, it sounds totally counterintuitive.
Yeah.
But it's because the demand for the Cerebras Cloud, which is their in-house infrastructure as a service offering, it exploded so violently that they literally could not pour concrete and secure power agreements fast enough to build their own data centers.
They just ran out of physical space.
Totally ran out. They had this massive backlog of developers desperate to rent compute time on their wafer-scale engines. Now, if they had told those developers, hey, wait 12 months for our new data center to come online, what do you think would happen?
They'd just leave.
Yeah.
They'd go right back to Nvidia GPUs on AWS or Azure.
Exactly. You lose the customer forever.
Okay, so to preserve that customer relationship and basically capture the cloud market share, they had to find compute capacity immediately, no matter what it cost them.
Bingo. And the only place that capacity existed was sitting in the private data centers of the enterprise customers who had just purchased the physical Cerebras racks.
Oh, wow. So they went back to their own buyers.
Yeah, Cerebras went to those customers and basically offered to rent the hardware back at a premium.
So they sell $1 million server rack to a client.
And then pay that client a daily operational fee to utilize the compute cycles on that exact same rack. They're effectively running the Cerebras cloud on third-party infrastructure.
It's like selling your car to a friend, right? But then realizing you suddenly have this incredibly lucrative gig as an Uber driver. And you can't wait 6 months for a new car to be delivered, so you just pay your friend a premium daily rate to rent back the car you just sold them just so you can meet the Uber demand.
That is a perfect analogy, and naturally you are paying absolute top dollar for that rental.
Right, which completely crushes your gross margins in the near term.
Exactly. It slashed their margins by roughly 500 basis points in the quarter. But strategically, it keeps your Uber customers, or in this case, the AI developers, from migrating to a competitor while you wait for your new cars.
So it's not a demand problem at all.
No. It is a classic textbook infrastructure bottleneck. It's a physical supply constraint. The margin trough is totally temporary.
Because they are building their own data centers, right?
Yeah, Cerebras has already secured over 600 megawatts of contracted company-owned data center capacity. That is all slated to go live across North America and Europe by the end of 2027.
And once those go live?
As those internal systems come online, they'll stop renting from their customers. Those heavy third-party operational costs will roll right off the books, and management fully expects core growth margins to rebound toward their long-term target of 60% or higher.
Okay, I understand the tactical necessity of it now, but I have to push back a little here. To be forced into this extreme rent-back situation where you are intentionally destroying your own margins just to satisfy developers, the underlying demand for this specific hardware has to be ferocious.
Oh, it is.
But why? Why is everyone so desperate for Cerebras cloud time? Why not just buy time on standard Nvidia GPUs, which are literally available everywhere?
Well, to really answer that, we have to look past the accounting. We have to dive straight into the physical mechanics of AI inference. We need to talk about their physics moat.
The physics moat, I love that term.
It's very real. Right now, in the semiconductor industry, everyone is battling something called the memory wall. It is this fundamental physical limitation of how traditional graphics processing units, GPUs, are designed.
Okay, let's break that memory wall down for everyone listening, because when we talk about large language models, there are two distinct phases of operation, right? First is training the model, which takes months of crunching data. But the phase Cerebras dominates is inference.
Yes, inference is the actual usage of the model out in the real world when it's answering your questions. And specifically, within inference, there is the decode phase.
Right, the generation phase.
Exactly. This is when the AI is generating its response to your prompt, spitting out text token by token. Now, to generate a single word, the processor has to read the entire neural network. It has to fetch the model's weights, the parameters, from memory, run the calculations, spit out the token, and then go all the way back to memory to fetch the weights again for the very next token.
And with traditional GPUs, those parameters are stored off chip, right? They use something called high bandwidth memory, or HBM.
Yeah, HBM. It consists of separate memory chips that literally sit next to the main processor on a circuit board. This means for every single token generated, massive amounts of data have to physically travel across a narrow memory bus connecting the compute cores to the HBM.
Which sounds fast, but in computer time.
In a model with 1 trillion parameters, moving that data back and forth creates a severe latency choke point. I mean, the compute cores themselves are incredibly fast, but they end up just sitting there, starved, waiting for data to arrive from the memory chips.
So traditional GPUs are essentially victims of their own architecture here. They have immense computational power, but they're bottlenecked by the physical distance the data has to travel.
Exactly.
So how does the rest of the industry, like Nvidia, try to solve this memory wall?
Through extreme brute force complexity. I mean, because a single GPU simply does not have enough onboard memory bandwidth to hold and serve a massive frontier model efficiently, Nvidia is forced to link huge clusters of GPUs together.
Right, they just spring them all up.
Yeah. Take their cutting-edge NVL72 rack architecture, for example. To aggregate enough memory bandwidth to serve a massive model, they literally have to link 72 separate GPUs using over 5,000 physical copper cables.
Wait, 5,000 physical copper cables?
5,000.
That sounds like an absolute networking and maintenance nightmare. Data has to traverse all those cables, hopping from chip to chip, just to answer a single prompt.
Yes, and the latency introduced by that network hopping is immense, not to mention the power loss as electricity travels through thousands of cables. And this is exactly where Cerebras completely flips the script.
Okay, so what do they do differently?
Instead of making small chips, wiring them together with thousands of cables, and storing the memory off-chip, they asked a fundamental question. They said, what if we just make one massive chip the size of an entire silicon wafer and put all the memory directly on the silicon right next to the compute cores?
The Wafer-Scale Engine.
Wafer-Scale Engine, exactly.
So they unveiled their new CS4 rack system at Supernova Day 2026. And looking at the specs from the sources here, the numbers are difficult to even comprehend. The CS4 uses 3 of their new Wafer-Scale Engine 3 turbo processors, the WSE3T.
Yeah, 3 of those monsters.
And because the memory is baked directly into the continuous silicon, each wafer packs 44 gigabytes of on-chip SRAM.
Which is key, because SRAM static random access memory is fundamentally different from the HBM used by competitors. SRAM is blisteringly fast.
Why is that?
2 reasons. First, it doesn't need to be constantly refreshed with power to hold its state. Second, and more importantly, it is physically located millimeters away from the logic cores. By keeping everything on a single, massive piece of silicon, the entire CS4 system delivers 750 petaflops of AI compute and a staggering 129.6 petabytes per second of memory bandwidth.
129.6 petabytes per second. Let me just put that in perspective for you listening. That is 2,000 times greater memory bandwidth than Nvidia's next-generation Rubin architecture.
It's hard to even visualize that scale.
2,000 times. And they use what they call switchless direct wafer links, right? So these 3 massive wafers talk to each other with only 2 microseconds of latency.
2 microseconds. The result is that they can effortlessly serve models exceeding 50 trillion parameters without the network ever choking.
Because the compute cores are never starved for data.
Exactly. The data is already right there. If we look at the pure physics of it, in hardware, the distance electricity has to travel dictates both your speed and your power efficiency. Cerebras literally just eliminates the distance.
And they went a step further with the physical design of the CS4 rack too, right? I read they introduced a new backpack design for power delivery.
Yeah, the backpack design is brilliant.
How does power delivery normally work on a standard GPU board?
So on a traditional board, The voltage regulators, which are the components that convert the power from the wall into the specific voltage the chip needs, they're usually located roughly 50 millimeters away from the processor.
Okay, 50 millimeters.
Now, pushing hundreds of amps of current across 50 millimeters of a printed circuit board causes massive power loss in the form of heat. But Cerebras designed this modular vertical backpack that places the power conversion just 0.5 millimeters for the silicon.
Wow, from 50 millimeters down to zero 0.5.
Yeah. By virtually eliminating that physical distance, they enable up to 10 times higher throughput per watt compared to their own previous generation.
It's like, okay, traditional GPUs are like having the world's smartest chef, but their pantry is 3 blocks away.
Huh, exactly. And they're being asked to cook 1 million complex meals every single second.
Right. So that walk down the block completely paralyzes the entire restaurant. Cerebras basically builds the chef directly inside the pantry where every single ingredient is just within arm's reach.
That is exactly what they've done physically on the silicon.
But wait, I have to ask, I'm looking at pictures of this wafer-scale engine, and you're talking about a continuous piece of silicon the size of a dinner plate.
It is massive.
We've all heard about the microscopic precision required for semiconductor manufacturing. Isn't a chip that big a complete manufacturing nightmare? Like, what if there's a single microscopic flaw on the silicon? Doesn't that render the whole massive wafer completely useless?
It's a really critical point, and it's actually why the industry abandoned wafer-scale computing back in the 1980s.
Oh, this has been tried before.
Oh, yeah. Pioneers like Gene Amdahl tried to build wafer-scale chips with a company called Trilogy Systems, and they failed spectacularly precisely because of this yield issue.
The yield problem.
Right. Because if you make a tiny GPU and there's a flaw on the wafer, you just throw away that one tiny square and you keep all the rest. But if your chip is the entire wafer, historically one flaw ruined the whole thing.
So how did Cerebras fix it?
They spent years solving this by designing massive redundancy directly into the silicon.
What does that mean in practice?
They etch extra compute cores and extra communication links all over the wafer. So when the chip is manufactured, they run a diagnostic. If they find a microscopic defect, the software simply routes around the broken core and uses a redundant one.
So the system literally heals itself before it ever leaves the factory.
Exactly. The yield problem is completely neutralized.
That is fascinating. But okay, even with this massive flawless chip that solves the memory wall, I still see a huge hurdle. You can't just rip out every Nvidia GPU in every data center across the world and replace it overnight.
No, you definitely can't.
Enterprises have billions of dollars invested in legacy hardware. How do they actually get this monolithic tech into an ecosystem that's built for standard GPUs without causing a massive IT headache?
And that is where their commercial strategy becomes just as brilliant as their physics.
Yeah.
Rather than trying to fight Nvidia and AMD for every single square inch of the data center, forcing clients into a 100% rip and replace scenario, Cerebras introduced something called heterogeneous disaggregation.
Heterogeneous disaggregation. That sounds like a phrase a consultant would charge $1,000 an hour to say.
Oh, absolutely.
What does that actually look like in practice?
Well, it goes back to those two distinct phases of large language model inference we discussed earlier.
The prefill and the decode.
Right. So the first phase is prefill. This is when the AI reads and processes your prompt, whether that's a short question, an entire book, or a massive code base.
Right.
The prefill phase requires reading a ton of data all at once, which is a highly parallel task. And GPUs are actually fantastic at parallel processing. They do this very efficiently.
Okay, but the second phase, the decode phase, where it actually generates the response word by word, that's sequential and memory bound, and that is where the GPUs choke.
Precisely. So Cerebras realize, why fight to do the prefill? Let the GPUs do what they're good at. So they formed these strategic partnerships with AMD and AWS to basically split the labor.
Oh, I see.
Yeah. In their integration with AMD, Cerebras utilizes AMD Helios racks, which are packed with 72 standard GPUs to process the initial prompts. The Helios rack acts as the intake valve. It handles the prefill, computes the context, and then routes that intermediate mathematical state directly to the Cerebras CS4 systems.
And then the CS4 takes over.
Exactly. The CS4 then takes over for the instant memory-bound decode phase.
So going back to our restaurant analogy, it's like a relay race in the kitchen. The GPU acts like the prep cook who chops all the vegetables and portions the meat. It's a parallel task. And once the prep is done, they hand it over to the master chef Cerebras, who actually cooks the meal at blistering speed inside the pantry.
That's exactly it. And this division of labor yields incredible operational metrics. By combining the architectures, they deliver 5 times higher token throughput per data center megawatt while drastically cutting the cost per token generated.
It's like a Trojan horse.
It is the ultimate Trojan horse into the broader market. Cerebras doesn't have to convince an enterprise to abandon their GPU investments. In fact, Cerebras literally purchases AMD Helios racks themselves, hosts them directly in the Cerebras cloud, and captures 100% of the cloud rental revenues on those hosted racks.
That is remarkably clever, but mechanically I have to push back here. Transferring massive context windows, sometimes tens of gigabytes, between an AMD prep cook and the Cerebras master chef,
Yeah,
that must introduce lag.
you'd think so, yes.
Like, if I upload a 10 gigabyte code base as my prompt, moving that intermediate state from an AMD server rack over to a Cerebras rack takes time. Does this disaggregated approach actually save time overall?
This is exactly why those direct wafer links in the new CS4 architecture are so critical. Those links operate at 2.4 terabits per second.
2.4 terabits.
Yes. The network transfer time is reduced to a microsecond blip. The context state moves from the GPU to the Wafer-Scale Engine so incredibly fast that the network penalty is completely eclipsed by the massive speed gain during the decode phase.
So the lag is effectively negligible.
Totally negligible. The overall time to first token and the generation speed remain far superior to a pure GPU setup. And we know this architecture works at scale because they deployed a similar strategy with Amazon.
Right, the AWS partnership.
Yeah. By partnering with AWS, Cerebras is integrating with the AWS Trainium 3 chips. They are embedding their wafer-scale decode engines directly into Amazon Bedrock, which is AWS's premier AI platform. And that global integration goes live by the first quarter of 2027.
Which brings us to the 800-pound gorilla in the room.
OpenAI?
Exactly. We know the technology bypasses the physical limits of GPUs. We know the disaggregation strategy allows them to slot into existing ecosystems. So who is actually buying this? The sources point to a staggering $25.4 billion backlog. And the vast majority of that is driven by the single anchor customer, OpenAI.
The financial forensics on this backlog are fascinating to dig into. The metric they use is remaining performance obligations, or RPO. This $25.4 billion figure represents legally contracted backlog.
And to be clear, that massive AWS integration we just discussed isn't even included in this RPO figure yet, right?
Right, it's not even in there yet. The foundation of this backlog is the Master Relationship Agreement, or MRA, struck with OpenAI.
The numbers in this master relationship agreement are just astronomical. It is valued at over $20 billion. OpenAI committed to deploying 750 megawatts of dedicated Cerebras capacity through 2028.
And they have options to expand that footprint up to a mind-blowing 2.0 gigawatts by 2030.
2 gigawatts. But OpenAI didn't just sign a purchase order and wait for delivery, right? They aggressively bankrolled the physical build-out of Cerebras infrastructure.
They essentially had to. OpenAI recognized that their future models required a level of inference speed that traditional GPU clusters simply could not provide, no matter how many copper cables Nvidia used. So, in January 2026, OpenAI provided Cerebras with a $1.005 billion infrastructure working capital loan.
I want to pause on that because that is insane. $1 billion working capital loan from a customer. How does that fundamentally alter the risk profile for Cerebras?
Oh, it massively de-risks their capital expenditure. Think about it. Building gigawatts of data center capacity requires massive upfront cash for concrete, steel, cooling systems, and grid interconnection fees.
Yeah, normally a hardware company has to dilute their shareholders or take on really expensive Wall Street debt to fund that kind of expansion.
Exactly. But OpenAI stepped in and basically acted as a quasi-bank. They provided $1 billion at a highly favorable 6% interest rate, maturing in December 2032.
So OpenAI is essentially acting as a bank for Cerebras, loaning them $1 billion just to guarantee they get the fast lane.
Yes. But the real genius of the deal is how Cerebras repays it. They do not repay this loan with cash.
Wait, really?
Nope. They amortize the debt via non-cash compute service credits.
So Cerebras pays them back in server time.
Exactly. As of June 2026, Cerebras had already repaid $86.3 million of that loan purely through compute credits.
Wow. That is brilliant. It guarantees OpenAI gets the fast lane, while Cerebras gets the physical infrastructure funded without draining their cash reserves.
Right. If you look at the broader revenue recognition cadence, about 22% of this total backlog is going to be delivered over the initial 24 months, basically through mid-2028.
And we actually saw the consumer-facing result of this massive bankrolled partnership in August 2026 when OpenAI launched GPT 5.6 Sol Ultrafast mode.
Oh yeah, the Sol rollout.
This premier service tier runs entirely on Cerebra's wafer-scale infrastructure. And the benchmark metrics on this rollout are historic. It achieves 750 output tokens per second.
Which is up to 14 times faster than standard GPU processing. I mean, if you map that against the broader market, it is 5 times faster than Anthropic's Claude Opus 4.8 in its fast mode and 11 times faster than Claude Fable 5.
Okay, 14 times faster, 750 tokens a second. I'm trying to visualize that, and I keep coming back to a core skepticism here. Is this just a vanity metric?
What do you mean?
Do you and I really need an AI to write an email or summarize a PDF at 750 words a second? Humans simply cannot read that fast. If the end user is a human staring at a screen, this level of speed seems entirely unnecessary.
Ah, I see what you're saying. But if you were evaluating this through the lens of human reading speed, you are using a paradigm that basically died in 2024.
Okay, explain that.
We are no longer generating text primarily for humans to read. The frontier of this industry is generating text for autonomous AI agents to process. This speed is not designed for a chatbot writing a polite email for you. It is the fundamental physics requirement for the next generation of enterprise software.
Right. Okay, let's explore that transition. Because the sources dedicate a significant portion of their analysis to how Cerebras is expanding beyond foundation labs like OpenAI and penetrating these high-value enterprise and security markets.
Yes, the agentic workflows.
What exactly constitutes an agentic workflow, and why is sub-second latency the catalyst that unlocks it?
Let's use software engineering as a prime example. Think about an autonomous AI agent tasked with writing a complex Python program. The agent does not just ingest your prompt and spit out the perfect final code on the first try.
Right, it's an iterative process.
Exactly. It utilizes a multi-step loop. It writes a plan. It creates the scaffolding. It generates a block of code. It then runs that code through a syntax checker. It finds an error. It debugs its own code, rewrites the block, and runs the test again.
So it's constantly having a conversation with itself.
The AI agent is constantly talking to itself, issuing dozens or hundreds of internal prompts back-to-back in a sequential chain to arrive at the final product.
So if an AI agent is a virtual employee, GPU latency basically makes it an employee that takes a mandatory 5-minute coffee break between every single keystroke.
Precisely. Every single round trip to a slow GPU cluster adds seconds or minutes of wait time to the loop. If an agent has to loop 50 times to debug a script, a traditional GPU setup might take 30 to 45 minutes to complete the task. The human user is just sitting there staring at a loading bar.
But with Cerebras,
With a 14-time speed increase from Cerebras, that 45-minute coding task is compressed into 3 minutes. That compression of time completely changes the economic utility of the agent.
Cerebras basically makes it down a pot of espresso and finish the project before you even blink.
Exactly. And the sources back this up with real enterprise adoption. They highlight Cognition, the company behind the AI software engineer Devin.
All right, Devin.
Yeah. Cognition moved their workloads to Cerebras, and they were running their SWE grep model at up to 2,800 tokens per second.
2,800.
That is 10 times faster than any frontier model running on a GPU. The sources also cite Lovable, a platform that powers over 50 million AI software creation projects. They specifically contracted dedicated Cerebras capacity to eliminate wait times across their multi-step coding workflows.
Because when inference feels instantaneous, the software moves from being a novelty to being a true extension of human thought.
Exactly. And if we look beyond software development, this sub-second latency unlocks total addressable markets that batch processing GPUs are simply locked out of. The most critical example in the sources is mission-critical cybersecurity.
Right. Cerebras built a highly unique moat here by partnering with CrowdStrike. Cybersecurity is literally a race against time. The audits discuss something called the 27-second adversary breakout window. What exactly happens in those 27 seconds?
So when a sophisticated threat actor, say a state-sponsored hacking group, breaches a corporate network, they don't just sit there. They attempt to move laterally, escalating privileges and infecting other servers.
And 27 seconds is the window to catch them.
The security industry has measured that, on average, it takes 27 seconds for an adversary to break out of their initial entry point and spread across the network. Security software has exactly 27 seconds to detect the anomaly, analyze the behavior, and quarantine the threat.
And traditional GPUs are too slow to analyze complex network traffic patterns using large language models within that window.
Far too slow. They rely on batch processing, gathering large amounts of data and analyzing it all at once, which introduces unacceptable latency. But because Cerebras operates with sub-second LLM inference, CrowdStrike can actually place the AI in line with live enterprise network traffic.
Wait, in line with live traffic?
Yes, the AI can read the network packets, apply deep reasoning to identify novel attack vectors, and intercept the threat actors in real time, well within that critical 27-second window.
That is incredible. And I imagine the exact same physics apply to high-frequency trading as well.
Absolutely. Firms like Jane Street are adopting Cerebras because financial modeling and algorithmic trading require real-time, deep reasoning execution that GPUs just fail to deliver.
Okay, I see the immense value in massive, complex security tasks and multi-step coding loops, but I am still struggling to reconcile this with the broader trend we see in the open source community.
The push toward smaller models.
Yeah, we are seeing smaller, distilled, highly efficient models getting better every single day. Won't these small models eventually run fast enough on local hardware or on cheap commodity GPUs? Doesn't the push towards small, open-weight models ultimately erase this high-end enterprise moat for Cerebras?
It is the most common bear argument against Cerebras, but it ignores the historical reality of computer science, specifically Jevans paradox.
Jevons paradox. Remind me how that applies here.
In technology, whenever computing becomes more efficient, we do not use less of it. We expand our ambitions and use drastically more. Yes, small distilled models will run locally on your laptop for basic tasks, but the most economically valuable, work-deep reasoning, complex architectural coding, real-time cryptographic security will always demand the most intelligent, and therefore the largest, frontier models.
So the frontier always shifts.
Right. As models get smarter, their parameter counts inherently grow. They will always expand to consume the maximum available compute. And to serve those massive trillion-parameter models at agentic speeds, wafer-scale integration remains completely essential.
Okay, so the demand is structurally sound, the TAM is expanding into cybersecurity and finance, and the physics moat is fully verified. But let's bring this back to the manufacturing reality.
The supply chain.
Yeah. The entire semiconductor industry is crying about severe constraints right now. Nvidia cannot get enough advanced packaging. AMD cannot source enough memory. How is Cerebras actually going to physically build enough of these dinner plate-sized chips to hit their promised $2.7 billion run rate target in 2027?
This is where their supply chain insulation becomes a massive competitive advantage. They're practically immune to the hardware choke points currently plaguing the rest of the industry.
How is that possible?
Well, to scale their contract manufacturing tenfold in fiscal year 2026, they partnered heavily with massive integrators like Flex and Sanmina. And they have an absolute war chest to fund this.
The IPO money.
Yeah. Following their massive $6.2 billion IPO, they hold $8.6 billion in cash and marketable securities, plus an unused $850 million credit facility.
But the cash doesn't matter if you can't buy the parts. And the two parts nobody can buy right now are high bandwidth memory and CoWoS advanced packaging from TSMC.
Exactly. And Cerebras requires zero high bandwidth memory.
Right, because of the on-chip SRAM we talked about.
Exactly. And even more critically, they require zero CoWoS advanced packaging.
CoWoS, that's chip on wafer on substrate, right?
Yes. It is the insanely complex 3D stacking technique that Nvidia has to use to glue their small compute chips and HBM chips together. It is literally the single biggest bottleneck in the global AI supply chain right now. But because Cerebras builds one massive 2D continuous wafer, they bypass the CoWoS bottleneck entirely.
They basically stepped off the congested highway that Nvidia and AMD are fighting on and built their own private dirt road using older, reliable tech that actually yields a faster vehicle.
That's a great way to put it.
Yeah.
And they're also fabricating the Wafer-Scale Engine 3 on TSMC's 5-nanometer node.
So they aren't fighting Apple or Nvidia for the bleeding edge 3-nanometer capacity?
Right. They use a mature, highly yielding, widely available node that isn't supply constrained.
Hold on, though. If 3-nanometer is the bleeding edge and 5-nanometer is older tech, aren't they sacrificing performance? Why do Nvidia and Apple fight tooth and nail for 3-nanometer capacity if it isn't strictly necessary? Are there hidden power costs or thermal limits to using older tech that Cerebras is just downplaying?
It's a fair question. Nvidia and Apple are fighting for 3-nanometer capacity because they are constrained by the reticle limit.
The reticle limit.
It's the physical maximum size a traditional chip can be printed. Because they can only make a chip so big, the only way to make it more powerful is to pack the transistors closer together, moving from 5 to 3 nanometers. That shrink also improves the power efficiency per transistor, which is vital when you're losing so much power pushing data off chip to HBM.
But Cerebras has an entire wafer. They have infinite space.
Precisely. They do not need to pack transistors into a tiny square. And because they eliminate the massive power loss of moving data off chip to HBM, their system-level efficiency is actually far superior, even using older transistors.
What about the heat, though?
They solve the thermal limits of generating heat across a massive wafer, with the direct liquid cooling integrated right into that CS4 backpack we discussed. By solving the physics at the system level, rather than the transistor level, their ability to scale revenue is purely dependent on securing physical data center space and power.
Not on competing for constrained bleeding-edge silicon.
Exactly.
Which perfectly frames the final verdict and the execution risks. Because as bulletproof as the physics and the supply chain seem, the forensic reports highlight 4 very real structural risks looming over the company that investors absolutely have to weigh. What is the first major red flag?
Extreme customer concentration.
Yeah.
This is not a highly diversified consumer software company. 3 entities, MBZUAI, G42, and OpenAI, represent over 75% of their total revenue and 76% of their accounts receivable.
Wait, 75% from just 3 customers?
Yes.
So if OpenAI has a board shakeup, or if the government blocks export licenses to G42 in the Middle East, Cerebras loses 3/4 of its cash flow overnight.
Exactly. Any contract dispute, regulatory block, or delay in delivering capacity to those 3 clients directly impairs the business.
What's the second risk?
It lies in their internal controls. In their SEC filings, Cerebras disclosed unremediated material weaknesses regarding their revenue recognition, their inventory accounting, their data center asset tracking, and their IT segregation of duties.
Oh, wow. Which explains some of that GAAP versus core revenue confusion we talked about at the beginning.
Yeah. As a newly public company scaling from millions to billions in revenue this fast, their back-office accounting apparatus is clearly struggling to keep pace with their engineering department.
It's a common growing pain for hyper-growth hardware startups, but it definitely introduces undeniable volatility to their quarterly reporting.
Absolutely. The third risk involves corporate governance. They utilize a multi-class voting structure where the insiders and founders hold 99.2% of the voting power through Class B stock.
99.2%.
Yeah, those shares carry 20 votes per share.
So public shareholders are purely providing capital. They are along for the ride with virtually zero say in how the company is run or if it accepts an acquisition offer.
Exactly. You are betting entirely on the founder's vision.
And the fourth risk.
The fourth, and arguably the most critical operational risk for hitting their 2027 revenue targets, is the physical execution of their data center build-out. We talked about how they are moving away from that margin-crushing rent-back strategy by building their own capacity. But they are currently sitting on $2.3 billion in uncommenced future lease obligations.
Meaning they still have to physically build and power over 600 megawatts of capacity.
Right.
So the fundamental risk here isn't will people buy the technology. The demand is completely verified by the $25 billion backlog. The real risk is can they pour the concrete, secure the transformers, and hook up to the power grid fast enough to fulfill the contracts?
That is the ultimate bottleneck. Any power interconnection delays from the grid operators or construction delays from their landlords directly threaten their ability to meet the strict service-level agreements in the OpenAI contract.
And if they miss those delivery dates?
Those guaranteed billions could evaporate. However, if we synthesize the investment case, the verdict from institutional allocators is that if Cerebras can execute the physical build-out, the post-IPO pullback represents an incredible asymmetric compounding opportunity.
Because they are scaling manufacturing to support tripling their core revenue to $2.7 billion in 2027.
Exactly. If we want to apply a summary analogy to what Cerebras actually represents to the broader market, they're basically building the high-speed optical nervous system of the generative AI era.
The optical nervous system.
Yeah, they're taking an industry built on static, slow, batch-processed intelligence and transforming it into a substrate for instantaneous real-time action.
The optical nervous system of AI. I think that is the key takeaway for everyone listening today. You have to look past the optical illusions. The temporary margin dips and the massive GAAP contra revenue charges hide a structural physics-based monopoly in real-time AI inference.
They really do.
Cerebras recognized that the memory wall was going to break traditional GPUs, so they built a chip the size of a dinner plate. They recognized they couldn't force a rip and replace of legacy data centers, so they cleverly turned their biggest competitors, AMD and AWS, into front-end intake valves.
And they secured the most important customer in the world, OpenAI, to literally bankroll the physical infrastructure required to scale it.
It really is a masterclass in combining hardware physics with ruthless commercial strategy, provided they can manage the extreme logistical risks of their growth.
Provided they can pour that concrete in time. Yeah.
Which leaves us with a final provocative thought for you to ponder. If Cerebras truly succeeds in becoming this optical nervous system, enabling millions of autonomous agents to execute multi-step logic, write software, and execute financial trades in sub-second timeframes, what happens to human oversight?
That is the terrifying part.
When AI moves from human reading speed to machine light speed, could this instantaneous execution create the AI equivalent of a stock market flash crash, but in everyday enterprise software? Think about a swarm of AI agents debugging core banking code, trading equities, or rerouting cybersecurity protocols at 14 times standard speed, making thousands of interconnected decisions before a human administrator can even refresh their dashboard.
Are our existing systems prepared for intelligence moving at the speed of light?
Probably not, but that is the frontier we are rushing toward. The physical constraints on AI are falling away, and speed is the vehicle accelerating us into completely uncharted territory.
It's going to be a wild ride.
Something for you to keep digging into on your own. Question the assumptions, look past the headline numbers, and always stay curious. Thanks for joining us on this deep dive.